Hello everyone, how's it going? In today's video, we will cover the stock Cosmos Health, trading under the ticker symbol COSM. The market has been very volatile as of late, with many titles having huge swings up and down. So for many people, they are very interested in the volatility of COSM because of the short squeeze potential. In this video, we will take a look at the stock from a technical and fundamental perspectives and determine what would be a recommended course of action to carry out for Cosmos Health. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section as every help is greatly appreciated. So regarding Cosmos Health, it's currently trading just below $5. For me, the $5 level is an important one because it is a very psychologically significant level, and it also, signals whether we can maintain the current momentum that has bounced back ever since late January to nowadays. Overall, Cosmos is a company that we can definitely consider to trade around as a meme stock, as a swing position, and at the same time, maybe at some point down the road, it may become once again a company in which we can invest for the long term and not just to focus on the short term. So right now it's, trading around $5. It's slightly down from the previous, almost $7. And also, if we look at the whole thing from like a long-term perspective, it's still very, very low. We have to go back like almost 8 years or 9 years, so almost a decade, in order to find somewhere that's nearly as comparable as this. So is this a good opportunity to buy Cosmos? See, as long as we assume that Cosmos will not go bankrupt, then yes, it will. Because the upward momentum is tremendous. Like, we can go back to where things were easily. But this is only by looking at the chart. If we look at how things are in the real world, then it might be very different. I would argue that given that now we evolve in a different environment, we shouldn't assume that things are going to be as rosy as they were before. And we shouldn't assume that Cosmos can just go back to, being a pharmaceutical company like it was before as well. It's going to need some serious restructuring and to rethink its business model and potentially like the business partnerships and to bring in new blood and so on. So regarding this, I would say that the fundamental relevance for us is as long as the company doesn't go bankrupt, there's a lot of blue sky upward momentum and upward room to go. If not, if we cannot put this possibility aside, then Cosmos is likely going to remain around the current levels. Like where maybe Cosmos is going to go bankrupt, then it's going to go into the penny stock territory. I mean, even from a price action perspective, recently I have seen some hope in that Cosmos is going to test the $10 level. At the moment, this doesn't seem to be the case. We're going to need, to say the very least, a break before the break. So Cosmos Health is an international healthcare group based in Chicago, selling nutraceuticals in 2 product lines, Sky Premium and Mediterranean Nation. It also commercializes generic medications. The company has presence in the United Kingdom and continental Europe. Overall, they have commercial presence in Europe, Middle East, Asia, of course, North America. The company has an emphasis on nutraceutical research due to the low risk profiles and also relatively clear regulations in this section. It's worth mentioning that the management believes that the stock now has a solvency issue, putting its going concern into doubt. The management mentioned that due to recurring losses, there will eventually be a going concern issue to be put on the table, and they believe that there can be a few solutions to be considered. Long story short, regarding of whether they should be issue new stocks, issue new debts, or have a restructuring of the debts. Essentially, they want to reduce the obligatory cash outflows and have a massive cash injections, something along those lines. Ultimately, they have decided to sell the equity, diluting shareholders, taking advantage of the renewed interest that retail investors have in Cosmos Health due to the expected short squeeze and the price increase that soon followed. The long-term price action has been plagued by poor results as well as the piling up of short orders, causing the price to plummet for a period of time, a long period of time. For the period between August and November 2022, the stock price declined by more than 80% before recovering back a little bit. Over the past few years, it regularly traded between the high tens and the low 3 digits. Obviously, if we only look at the whole situation from a technical perspective, we would believe that now is a good opportunity to buy, historically speaking. This might very well be the case, however, I personally believe that given the current circumstances, especially the market conditions, we are unlikely to see the stock getting back to these highs, at least in the medium term or shorter, as the market and the company have evolved from how they were previously. With that being said, we should be able to see some significant recoveries nonetheless due to the short squeeze if it were to occur. Although the relevance of financials are limited in the case of Cosmos, the financials can tell us some key information about its financial health. When we look at the profitability, things are stagnating. Both revenue and gross margins have a hard time growing, while the operating expenses have been hovering between $2 to $3 million. What that means is that if Cosmos Health is popular with shareholders, people are looking for potentials beyond the fundamentals, if we assume that things will remain constant. The positive aspect in all this, if we have to find one, is that its liabilities are under control, between $40 and $45 million, with a peak around the Q4 of 2021 at $51 million. So the company is trying its best to keep things under control. But we can also see that the company's assets and operations are almost entirely financed by debts, with a relatively small portion of equity. This means that Cosmos would have a significant amount of obligatory cash outflows, and if they don't comply to those repayments, the company will go insolvent, with its assets liquidated to reimburse the creditors first, and then give the leftovers to equity shareholders, if there is anything that is left afterwards. The cash situation for Cosmos is also negative, with most of the cash inflows from financing, some of which is from debt. Most of it is from debt. This also confirms that the remarks earlier regarding debt versus equity financing and also the obligatory cash outflows. Overall, the situation of Cosmos is not looking good. And this is the reason why it has a large short position against it. This would reinforce my feeling that Cosmos Health is good for trading and not necessarily for investment. The low cash levels suggest that the company may have to go through another round of dilution soon, or to issue more debts. So now let's also take a look at the shareholder composition. There is currently no institutional shareholders. If this is the case, we would be looking at a stock that is obviously fit for short-term swing trade. The uncertain future of Cosmos would mean that the short-term outlook of the stock would be very volatile, upward or otherwise. One key behavioral difference between institutional and retail traders is their investment horizon. Institutionals tend to take longer views. This is why they can afford to ignore the short-term volatilities. Retails, on the other hand, tend to focus more on the short-term gains and more likely to make decisions on a whim. Another behavioral difference is that very often institutional shareholders tend to be more active in the corporate governance. We might also be very active in corporate governance, to be honest, but we tend to type it out on a Reddit post or in YouTube comments instead of sharing it with the management, because we may not be able to reach them in the first place, or very difficult to do so. Now, Cosmos Health has a massive appeal due to the potentials for a short squeeze. The short squeezes are what shareholders hope to achieve by piling in a stock that is massively shorted, forcing the short sellers to redeem their positions. They are very often compelled to do so because as long as those positions remain open, they would have to pay financing fees to brokers, and also having to assume the risk of infinite loss, since the potential loss is from their entry point and the infinitely high. In the case of Cosmos, there is a large position of shares being sold against the company, taking more than 1.3 days to cover. This means that if the shares were to skyrocket, whether because the fundamentals have improved, the changing prospects, or the demand for the stock, this may force the shorts to redeem. Overall, I believe that those shares have a significant possibility to squeeze, at least for the moment. It's important to note that the short interest is not a guarantee of a short squeeze, but a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and that short squeeze may never happen to begin with. So my recommendation regarding, Cosmos is to start buying it now, but to leave the vast majority of your allocation once the price stabilizes. The initial position is just to have some skin in the game. It's definitely not to buy it at the current price, because I think that the downward momentum hasn't stopped yet. At the same time, should you really short sell this stock? I personally wouldn't recommend it, just because the loss would be between, $5 and infinite, whereas the potential gain is just $5. I would say that now is a good entry point, and to gradually add up to the position over the next couple of months. The maximum exposure should be around 1% of the capital.